All right. So before we start, can I see everyone raise their hand for those who have invested in AI, an AI company or AI product before? Okay, quite a lot actually. How about those who've invested in blockchain companies or a token, etc.? Can I see your hands, please? Seems like there's more familiarity with blockchain projects. Okay, so first off, if you gentlemen, ladies and gentlemen, can introduce yourself to the crowd, that'd be amazing. Tell us a little bit about who you are, brief, concise, and then we'll start off.
Okay. Well, thank you very much for having me on here. I didn't expect to be in this panel. I'm very happy to be here, though, because I have something very important to say in a bit. My name is Jillian Godsil. I'm a journalist and broadcaster, and very happy to be co-chairing the stage today with the amazing Eric. He's amazing. And I also work in the blockchain space. I have done so for the last 2 years as a journalist and broadcaster, but I also been an advisor to several ICOs. So I've seen it at the cold face, as well as interviewing some of the very senior members of the society.
Awesome. Thank you so much, Jillian. Steve, if you could introduce yourself.
Hi, my name's Stephen Kelso. I run Galaxy Digital in Europe. Galaxy Digital is a merchant bank focused exclusively on the digital asset realm. We've got 4 points of contact into the ecosystem. We do principal investments, we do advisory, we do asset management, and we're one of the biggest traders of crypto.
Thank you so much, Steve. Johnny.
Hi, my name's Jonny Fry from a company called Team Blockchain. And we produce a weekly analysis and research looking at how, where, and why blockchain technology and digital assets are being used, giving real examples to try and bring it to life. My slightly sort of longer-term background is I set up and ran an asset management business here in London and floated on the stock exchange. So had a reasonable experience of looking at businesses that are either looking to float on the market or already floated, and what are some of the things you're looking for sort of successful investing.
Awesome. Thank you so much. So let's kick off. We're going to cover 3 things today, everybody. We're going to look at industry-specific, company-specific, but also product-specific. So we're going to go from really macro all the way into the micro, discussing the recipes for successful investments in AI and blockchain. So without further ado, in very general, what is your favorite among the 2 technologies in terms of investment? What makes you, there's no right or wrong answer, by the way. It's just pure personal opinions. But what do you guys feel more excited about, blockchain technology or AI? If I can kick off with Jillian, ladies first.
I'm mad about blockchain. I really am. I mean, AI is cool. I was told earlier by Nick that apparently we've already passed singularity. That's kind of scary. But I love blockchain. And the reason I joined this industry about 2.5 years ago, and I was invited to join an ICO at the end of 2017. You can imagine all the hype. It was amazing. And then after a while, I mean, I love the people who work in this industry. And it's been said several times on the stage today, is that people who work in the blockchain industry, they want to make the world a better place. And I am not a hippy-dippy, flower lady, whatever. I actually think it's genuine. And I know it's genuine because people who are working in this space, it's no longer a zero-sum game. It is people working together in a field of abundance. And if that sounds hippy-dippy, it's not, because there's enough food to feed the world. So it's like taking real things and unthinking the world, and the energy of the people in this space is just huge, and I love that.
That's
so
absolutely amazing. So one for blockchain, so it's really the meaning behind it, not just the technology,
the technology
social
is
side.
So cool. It's so cool, but it's the people who are behind it, and people make technology, not technology.
Thank you so much, Jillian. Steve?
That's a hard answer to follow.
I want to save the world. Sorry.
So I've already made my choice, working for a blockchain company, Galaxy. That's all we do. But for me, for an outsider's perspective, I rather not start with a technology, but rather start with what's the problem that's been solved here? What is the incremental better solution for whom? And that might be an AI solution, that might be a blockchain solution, but I think if we're looking at this through the investment lens and what's going to be a good investment, I always start with actually, okay, what is the new value add? What's the new problem being solved here?
Fantastic answer. Thank you so much, Johnny.
Gosh, I'm really torn between hippy-dippy, flowery. I suppose one thing I would like to just touch on what Jillian's saying there, and this is a question which has come up, and we were talking actually last night on the radio about this, which was quite interesting. What is different about blockchain from a business perspective? And I think one of the interesting things is that we have this terminology called collective capitalism. And what that means, and I'll give you a very concrete example of that, is that there's a little company called Beyond Petroleum, although they're doing lots of petroleum at the moment, but they will get beyond it at some stage. And BP have created a platform called VACT, V-A-K-T. And that is now responsible for 80% of all the production coming out of the North Sea. And it's actually improved the efficiency of production by between 30 and 40%. But rather than doing what historically companies would have done and create a USP, a unique selling proposition, interesting, most millennials I ask what the hell it is, and I think it's some sort of banking term, but it's, why haven't they kept it to themselves when they've actually shared it with their competitors? TradeLens have done the same thing in the shipping industry. Louis Vuitton, Moe Henderson have done the same thing in the luxury goods industry. And so I think it's a really good example of how the technology has shifted the way in which businesses are actually acting. To answer your question, though, if that's my flowery bit done, we see, at Team Blockchain, we see blockchain is like a skeleton. And off that skeleton will hang AI, big data, machine learning, IoT. And so I don't think it's a choice of one is better than the other. And we have to be careful when we use things or words like artificial intelligence. It's not artificial, it's not intelligence. And smart contracts are not smart and they're not contracts. So I think we sometimes have to be careful, particularly with investors, that we don't appear to be very knowledgeable experts, because right now in this sector, even as a middle-aged old fart, as I am, and Steve, I'm sorry, you're going to join me on that one as well, because you've been kicking around the markets a while, I know. I've yet to meet an expert when it comes to investing in this sector. We are all learning, and that's why most of us are here today, because there's some really interesting things being spoken about. There's a lot of rubbish also being talked about. So be very careful of the investment experts, because it's changing so quickly. We don't know the questions, let alone the answers.
Fantastic. 3 different angles, really, really interesting. So we talked about the industry. Now let's move on to the companies themselves. A little more micro in that perspective. And if you don't mind, guys, telling us, like, when you're looking at companies, whether they're AI, whether they're blockchain, whether they're working with each other in some sort of synchronicity, but what is your do's and don'ts list? If you had a short list of what you need to be very careful to find before placing or making an investment, and what are basically the no-goes for you, where you're like, absolutely, I will never invest in this company. A few of both would be absolutely great. Jillian, if you don't mind kicking off with you.
Yeah, I've got a real do and a real bee in my bonnet. I'm in this industry, I'm in the fintech industry 30 years, so I'm kind of one of the old farts as well. I'm probably older than you guys, never mind. And I keep on saying, for the first time in my career, my age and my gender is a positive, right? The first time being a woman and being 54 is a positive. But what's even more interesting is that there's been studies coming out, and you probably have heard of them, Credit Suisse, Nordea, and McKinsey. I'm on diversity, so it's not just women, it's diversity. And if there is a woman on the board in a decision-making role, and a woman and other diverse peoples, their profitability is gone up by something like 12 or 13%. If you also put in other diverse people, so it's not just women, not just gender, you put in, different ethnic groups, sexual orientations, the whole lot, the profitability goes up 33%. So the simple rule is, and this has been proven, it's been studies done over the last 10 years and recently published, they're very, very thorough, these are data-backed, so it's not like, oh, it's nice to have women on the board or whatever, and also it means women, I say women in particular, in decision-making roles, not just making the coffee or in HR, legal, or accounting, which is traditional roles, have them actually in decision-making roles, the value of that company will go up. So you would be remiss not to look at the board of the company. If a woman is not there, don't invest. If a woman is there, put all your money in there. Simple rule, one rule.
So for you, you want to see women at a board level making decisions. That is a big green light for you.
Well, big data. And do you know what's going to happen too as well? Because all these pension funds invest in big companies, right? And if they're investing in companies in which there aren't women in decision-making roles, they're investing in companies that are likely to make 12% less than other companies that do have women in decision-making roles. And guess what? I can see in the future class action suits coming down the road saying, why did not you invent in these companies? Because they are proven to generate better profits. So the touchy-feely stuff, again, hippy-dippy, it actually is backed up by big science. So that's my one rule. Make sure there's diversity in the decision-making team.
In the United States as well, venture capital has shown that women-led businesses actually generate better returns than men-led businesses. There are some studies that back that up
as well. And
it's
not anti-men, it's just about evening the scale.
Absolutely, absolutely. Great response. Steve, if you don't mind.
Sure. So at Galaxy, we see three big movements going on in blockchain at the minute. There's the digital gold store of value, and we have a product for that. There is the tokenization movement that is slightly further away, but we have a product for that. And then there is the whole Web 3.0. And as an engineer, that's really what led me into blockchain in the first instance, and that's really what Jonny's been speaking to. And sure enough, we've got a product soon to launch for that. When it comes to, and this is really sort of, listening to Jillian, she's talking about diversification. And, in financial markets, Markovitz won his Nobel Prize, for work done in 1953 on actually the science behind diversification and why portfolios work better. And I think, what Jillian's speaking to, that's one aspect of applying that science. Within sort of venture funds, I think the first rule of risk management is diversification. In trading, every trader knows the first rule of trading is know your position. In investing, it's diversification. And particularly in venture, there have been studies done, the optimum number of investments in a portfolio that one team can manage is 23. Other people come up with numbers sort of 30 to 40. But I think, that's rule number one, diversification. For us in Galaxy, we're very old school in terms of the lessons learned and how we do business. It starts with a team. You're picking someone, you're investing in the character of the team, right? Character is everything. Their capability, have they been shown to, have they proven success, track records in the old world? Have they built and exited investments before? Because to do it where the boundary conditions are much less well defined in the digital area, well, that's going to be so much harder if you haven't learned those lessons like Jonny's previous business. So that sort of adds to credibility. The big no-nos for us, again, as in real life, if something seems too good to be true, it probably is, right? And that's not a glib statement, but if you can't quite follow the tech, if you can't quite follow those couple of points in the process that's just been explained to you before you sign on the line that is dotted, don't do it.
Really good advice. Thank you so much, Jonny, if you don't mind weighing in.
Okay, so I suppose there's a couple of themes that come up there. The first thing is the team. And does the team, has it got a track record of showing that they're open-minded? Because the only constant in business, from my experience, is change. So can the management adapt to change? And I'd like to give you a little example of that. There's a company in America called Walmart. And if Walmart managed to persuade 20% of their turnover to accept the Wall coin or the Marty coin or Uncle Sam coin or whatever they're going to call it, instead of a credit card, you would increase Walmart's profits by 33%, an extra $1 billion a year. If you did the same over here to Tesco's and Sainsbury's, just 20% goes from credit card to some sort of, supermarket coin, whatever they want to call it, then they'd increase their profits by about 20%. So do the management, and potentially I think there's a whole issue around fiduciary responsibilities and management potentially being accountable if they don't know what they're talking about and haven't actually looked at these things. Because there's not many businesses you can go and say, potentially you can increase your profits by that much that are publicly quoted. Unfortunately, being a little bit older, I would look at simple things like, have you got any cash in the bank? Because businesses don't go bust because they're not profitable. They don't survive because they've run out of money. The second thing is, what's your exit route? There's no point me investing if I don't know who's going to be the greater fool and buy my investment when it's gone up. So what's your exit plan? And then the third thing, which I just find quite amusing, you talk to businesses and you say, well, can I have a look at your sensitivity analysis? And they say, oh, yes, we're very ethically minded and we're very green. I say, no, I'm not sensitive about that. I want to look at your numbers. What happens if your revenue goes up or down by 10, 20, 30%? Where are the pinch points? And if it's down by 20%, what would you do? What action would you take to actually continue to be profitable or to continue not to burn cash in the event your revenue went down? If I gave you, and it's amazing, I'm sure many of you got friends who run businesses, go and ask them, if I gave you £1 million today for your business, what would you do? Oh, pay the bank off, have a holiday. No. What would you do to drive your business? And again, in my experience, most of them haven't got a chuffing clue. So asking what you would do and giving someone money and how they scale the business it's quite a good insight to how people are running the business on a day-to-day basis.
Fantastically put. So we have diversification, we have gender inclusion, we have team, we have business plan, strategy, exit strategy, some really good stuff. Now, we focused on the industry, guys. We moved to the company. Now let's look at actual equity and compare that with the token economy. So obviously, as you know, in terms of investments, utility tokens are not the most popular as of today. And of course, we had a few commentaries, interesting with some foul language earlier. But I would love to hear your angle in terms of investment. Do you still believe there's a world for the utility token and companies who are more product-driven, where you more invest into a product rather than a company? Or do you believe everything will be securitized and it will all be equities? Would you personally put money? Why or why not? Jillian, if you don't mind kicking off.
Well, I'm sort of poacher term gamekeeper because I'm not an investor. I'm someone working for companies or interviewing them. But what is interesting is that what I loved about the ICO, and I lived through a bit of the craziness, was that it was a way to democratize crowdfunding. It was a way for ordinary retail investors to get involved. And now that they got involved with, you know, maybe suspect stuff, whatever, is kind of neither here nor there, because you can put your money on a horse at the betting shop, so whatever you want to do. So I loved that whole sort of freedom and that excitement and the big, you know, put your fingers up to traditional finance, you know, because you don't have to be an accredited investor, all this type of stuff which kind of makes finance so tough for, it's very good. If you're very wealthy, you know, wealth follows wealth. But if you're retail, you can't, or if you're a small startup, how do you get it? So I loved all that. Now, we saw the craziness too as well. So in answer to your question, I do think the whole utility tokens, they probably have seen their day. Because the other thing too is when you invest as anybody, a retailer or investor, if you just buy utility tokens, you're not buying equity in the company, obviously. So you have no say in what the company does. But by paradox, because everybody uses Telegram, the CEO of that company is accessible to everybody and they're expected to act as though they've been through an IPO, which they haven't. And that kind of blows people's brains left, right, and so there's a couple of, you know, it disconnects there, I think. But ultimately, I mean, I like the idea that, I love the democratization. That to me is super duper. It's fantastic. The fact that it will change. And I think maybe companies need to go for the first round might be with some equity, because that makes sense, because you're going to give it, and it's this very start point. Will the utility tokens go away? I don't think so. Like in the EOS blockchain framework, they use utility to actually pay for the services. So that actually is a real service. And I work for one company, name plug here. You said earlier about problem solving. It's Europe Chain, and what they're doing is they're providing a GDPR compliant blockchain. Now that's it's problem solving. The utility coin is used to pay for the services. So there's a lot of things they're going to token raise soon. So actually that makes a lot of sense. However, are those heady days still there? No. And I'm sorry I missed them.
Awesome. So it kind of start with equity rounds, and then if you believe in the token economy, perhaps.
Why not? Because I get very cross when people say, oh, you have to be an accredited investor to invest in this thing. And I'm going, A, what makes you a better investor? Except, I mean, like Trump has managed to inherit millions and lose half them, whatever. Well, you know, what makes you a better investor? And B, it locks out people from the system. And I find that very, you know, again, you can bet on a horse. Why can't you bet on a company? So, yeah, I would like to see. I like that democratization. I'm an anarchist.
Thank you so much, Jillian. Steve, yourself, your angle on that?
I think, again, to repeat myself, I start with the business plan. I start with the investment and how it's using tokens to solve a problem. And there are plenty of like really great projects and businesses, some of the biggest companies in the world looking at how they're using it. And, you know, Jonny sort of illustrated the Walmart example. That's how I look at it. I don't say, okay, here's an interesting coin in isolation, and say, I think those days are over for utility tokens.
Okay, awesome. So you look at the ecosystem itself, the token economy, and then perhaps look at the other utilities itself. Awesome. Thank you so much. Jonny.
Okay, so the flippant answer is, what's the best investment that all of you have heard of ever? How many of you got mobile phones? Many of you? Have you heard of that company called Vodafone? Yep. Do you know how you got Vodafone shares? No? If you owned a company called Rakel, you'd have been given Vodafone shares. You paid nothing for them. So any increase, even a penny, is a rather large percentage increase. In the same way, if you're now driving around in Ireland in a Jaguar Land Rover, or a Jaguar or a Land Rover, because you can't drive two cars at the same time, allegedly, unless you've got artificial intelligence, obviously, you're being given something called IOTA. You're being given something for your time and your attention. So how do you put a value in terms of the percentage increase? And you're going to see more and more coins, more and more tokens being issued and be given to you for your attention. So instead of getting these things called likes and follows and all the rest of it on some of the social media sites, you're going to be paid for your attention. So like it or not, you are going to get sucked into this economy and you'll actually be paid. So you won't actually make an investment. You're actually going to be part of the ecosystem. But the thing that excites me from an investment perspective is actually the technology of blockchain and its impact that it's having on the bond market. Now, last year, there were $6.6 trillion issued by the world for bonds, because every 5, 10, 20 years, depending on the length of the bonds, they mature, they have to be renewed, and given the crazy situation we have of quantitative easing, the amount of debt that's been created, and given the fact that there's only 10 companies on the S&P 500 that are net cash because they've gone on a borrowing binge, there's a huge amount of debt that's been built up and a huge amount of bonds. Well, if you could reduce the cost of issuing bonds so that this audience and the companies you're involved in, i.e. small, medium-sized businesses typically, can start accessing the debt market, then you've got a new form of investment and a new form of capital that you can start tapping in, which right now is only the preserve of people if you want to do $50 to $100 million type issuance. So I see that as a really interesting investment and potentially attacking the peer-to-peer market, because investors can get exposure to businesses in a debt instrument as opposed to an equity instrument, which arguably could be argued to be safer and it's giving you a decent income, unlike leaving your money in the bank.
Very nicely put. So guys, we looked at the industry, we looked at the company-specific products themselves. We have time for 2 questions. If we can pass on the microphone in case I forgot to ask your favorite question. Who would like to ask a question? Please show us your lovely hand. Anyone would like to ask a question?
Microphone. Thanks. Jonny, I would like to come back to the example that you mentioned about Walmart and obviously introducing their own coin. What the advantage of that would be against a stable coin on the ledger? Because obviously you're hoping that will save on transaction fees with MasterCard or Visa. Why would they not use a stable coin? And on the other hand, if they created their own coin, would that be airdropped or they would be selling that coin? How would they keep the value of that coin stable if they decide to go with that model? Thank you.
Wow, how long you got? Let me just quickly look at another company which we're all familiar with, Starbucks. How many of you have got prepaid cards with Starbucks? A few of you. Starbucks have got 1.6 billion in prepaid coffee cards today. Last year they wrote off $150 million into their P&L because actually some of you didn't put your hands up because you realised you lost them. And they reckon 10% of the cards get lost. So what we're seeing is arguably West Coast coming to attack East Coast. The tech companies, and Walmart isn't, but they're doing a lot in the payments area, coming over and eating into the financial service sector. But your Walmart example, they've just announced a use case on supply chains where they're actually going to monitor and track shrimps from India through to people's plates. And I have to be honest, I don't really care where my shrimps come from. My kids really do. They want provenance. And they also want to know that shrimp farmer is being looked after and taken care of. So we're going back to the flowery, collaborative world, which I think is just fantastic. And so Walmart not only will encourage their customers, but also if they've got all the information and all that data electronically, they'll start paying their suppliers. So whether they're airdropped, whether they actually encourage people to put money into the Walmart card, token, whatever you call it, because they get some sort of discount, it's no different to what we've got at the moment with Club Card points, AMR points, for those of you a little bit older, Green Shield stamps, paraffin points, all the rest of it. This, there's nothing new, but this is just a digital, much, much more efficient way to do it, and those advantages can be shared.
Okay, we have a time for one last question. Thank you so much, Jonny, for that.
All right, thanks. I'm Anh from Vietnam. And I would like to have a question that when you're talking about the stream case, having a blockchain that is tracking the origin to the table, like the origin of the stream, because actually in one of our projects, we are tracking the coffee from the origin to the coffee vending machines. So from Colombia, Vietnam, Brazil, like whether it is sustainable coffee or things like that. So have you encountered any business or chain or blockchain project that is doing the similar thing, which is already successful in tracking the origin and,
Yeah, there's, guess what it's called? Coffee coin. Coffee coin is actually a coin that's been set up in Brazil by, and I'm not going to pronounce the Brazilian name, but it's basically the biggest trade association for coffee growers to do exactly what you're saying. But the interesting thing they're doing is that by actually pre-selling your potential production, bear in mind these are semi-subsistence farmers, so they're talking about pre-selling, hedging, forward selling, fairly complicated terms, used by farmers and massive organizations like Cargill all the time, but they're able to therefore pre-sell their production to an extent and buy equipment, which means they can guarantee better production going forward.
And could I add just one piece to that? I know a company called Moi Coffee that is doing that, a similar idea, because coffee is a big thing, the fair trade coffee. They're going one step further, it's on the blockchain too as well. But they're also, you know how there's, when you actually, what do you call it, when you roast your coffee, that's where you add the value. And they're putting the money back in to put roasting plants actually next to those farmers who are on subsistence level. So it's coming through the blockchain. People want to do well and do good. So it's, yeah, hippy-dippy.
I'll just add one thing to there's a lady who's quite active in the London sector, but she's not here, Genevieve, who I know, Eric, you know her. She's an American Haitian. Haiti got wiped out by a volcano, by a hurricane a few years ago. She's involved in a project whereby the farmers have gone from 6 cents to $1.
Wow.
In terms of the money they get for their avocados. So it's a real good example. And all these bloody idiots who stand up and say, show me examples, all this is all theoretical. There's real practical examples of what's going on in society today happening with this technology.
Thank you so much, everyone. Let's give a round of applause. Thank you very much. Awesome panel.
Thank you very much. Thank you.